Welcome, my name is Vishal Teksnani. Today I'm speaking to the CFO of Macquarie Group, Alex Harvey, and we're going to talk about the group's recent first half results, its strategy under a new incoming CEO, and we're also going to talk about the prospects for dividend growth at Macquarie. Alex, it's so great to have you here. How are you?
Thanks, Vishal. I'm very well, thank you.
That's great. So Alex, the market reacted really positively to Macquarie's results. You raised your full year earnings guidance by 10%, and analysts were quite surprised that you did that so soon into the full year. Can you talk about what's driving that optimism?
Yeah, sure, thanks. And the first half, obviously, we're pleased with, up 5% from a net profit viewpoint. And you can see the drive coming through those capital markets facing businesses, the commodities and global markets business and Macquarie Capital. So we saw strong halves from those. In terms of the outlook, obviously if you go through each of the groups, if you think about it from an asset management viewpoint, we saw our assets under management grow up to $550 billion. So we're seeing an improved contribution from base fees. In terms of the corporate and asset finance business, we expect an inline contribution from an asset viewpoint. We also, from a principal finance viewpoint, expecting some realisations in the second half, and we talked about the energetics business. We're seeing good underlying growth in terms of volumes in our BFS business. And in our CGM business, the capital markets facing businesses, good customer franchises, albeit on strong conditions in the first half. And so we expect those customer franchises to drive activity. And from a Macquarie Capital viewpoint, the fee income has been strong in the first half, and we're expecting, we've assumed similar conditions in the second half, and also a solid pipeline of realisations. So when you bring all that together, we have increased our guidance, or we've stepped up our guidance to be up 10% on where we were in FY18.
Okay, so that's the short-term outlook. Let's take a step back and look at Macquarie Group from a longer-term picture. So outgoing CEO, Nicholas Moore came in about 10 years ago, and he really focused on building out those annuity-style businesses at Macquarie. You now have a new incoming CEO, Shemara Wikramanayake. What is her strategy going to be? Is there going to be any shift under her leadership?
Yeah, well, I think Shemara has obviously been with the group for over 30 years as well. So she's a long-standing part of Macquarie, and a long time on the executive committee as well. And so, yeah, I would expect relatively little change in terms of the strategy. That idea that we have people close to clients, close to situations on the ground, finding opportunities, and then turning those opportunities from an idea into actually executing and getting something done. So I think Shemara's approach will be very consistent with that. Obviously, made a couple of group type changes during our half year results. We obviously moved our motor vehicles business into the BFS business, and that's really to align the retail businesses at Macquarie. And we also moved our real estate asset management business out of Macquarie Capital into the mirror business, again to align those fiduciary businesses. But generally speaking, I would say, Shemara's been around a long time. She's been part of that successful strategy for Macquarie, and I'm sure it'll be much of the same.
Okay, excellent. I'd also like to talk about inorganic opportunities. So Macquarie was in the news last week, rumoured to be taking a tilt at AMP or AMP Capital. Now I understand you can't comment on market speculation, but there are financial services assets for sale in this environment. Is Macquarie a buyer?
I think we talked about this a lot before. I mean, obviously where most of our growth comes from just organic growth. Yeah, it's people seeing opportunities on the ground, in areas where we've got expertise and actually turning those ideas into a reality, alongside and for the benefit of obviously of our clients. So most of the growth is organic. Obviously over time you have seen some acquisitions. In recent times, for instance, in the CGM business, we bought the Cargill North American gas and power business and the Cargill oil businesses. In our asset management business, we bought the GLL real estate platform, we bought the Value Invest platform. So you do see these smaller inorganic type acquisitions. But largely the acquisitions largely the growth is much more organic coming through the activities. Now, obviously, as you'd expect, and you'd want us to be doing, along the way we look at lots of things, and that's just part of making sure we're as informed as we can be about the opportunities to take Macquarie's business going forward.
Okay, let's turn to dividends. So Australian investors obviously love banks for their high dividends, and what they especially love is when the income is growing year on year, and Macquarie has grown its dividends quite significantly for 7 consecutive financial years. So based on that short-term profit we talked about in the first question, based on your capital levels, what are the prospects of that dividend growth continuing for investors?
Well, obviously I can't comment specifically on dividend levels going forward. As you say, if you look over the last 7 years, the compound growth rate has been about 16%. We're paying a $2.15 dividend this half and 45% franked. Overall, of course, the payout ratio that the board has agreed is a 60 to 80% payout ratio, and so we'll continue to see how things go forward.
All right, excellent. So as a retail investor, the picture you've painted seems to be quite positive for Macquarie, but I wonder what the risks are. What are the risks of, say, market calamity, or some of these deals that you're doing perhaps not going through that might hinder or cause you to wind back those forecasts? What are the risks investors should be worried about?
Well, obviously, as a global financial services organisation, we're exposed to a range of risks: market risks, credit risks, liquidity risks, regulatory risks, and so on. So there's a range of risks that we think about regularly as part of managing Macquarie. What I would say, though, is over a long period of time, the risk management approach that we've had at Macquarie has been a very strong approach. The idea that risk is owned at the business unit level, the idea that we understand and really think through those worst case scenarios before we take any commitment on.
So investors should know that it's a really strong risk framework.
Yeah, that model, I think, has stood the test of time, and I think the idea with that model really is to not have to pick one risk over another, but generally to be really focused on all risks that might affect our business, and how do we manage those risks and really understand and manage those risks going forward.
Alex, thank you so much for your time and for coming in to speak to me and to our community of Macquarie shareholders on nabtrade.
Thank you very much. Thanks for having me.
I hope you found this video informative. Now please remember, what we talked about today isn't investment advice. If you're considering transacting in Macquarie Group's shares, it's really important that you do your research, and please consider seeking financial advice so that you can get the help in making an investment decision that's right for your circumstances. My name is Vishal Tekshanani, and I'll see you next time.